Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right, so today we are talking about 5 ways to reduce your chances of getting an audit. Now, one of the things that drives me absolutely bananas is when someone says, well, I only got a 1 in so-and-so chance of getting audited, or only 1% of home business owners get audited. Listen to me. All those odds sound great until somebody hits bingo and you're it. Okay, then all of a sudden the odds don't matter, right? Because it's your turn. So, absolutely no one can prevent you from getting audited. When it's your turn, it's your turn. That's it. All right. So, but today I'm going to share with you 5 ways that you can actually reduce your chances of getting audited. All right. Number 1 is to treat every tax return and file every tax return as if you knew you were going to be audited. So when if you know you're going to be audited, you're going to make sure everything is on the up and up. You're not going to be fudging expenses. You're not going to be claiming credits that you don't have, that you're not entitled to. You're not going to be doing any of that stuff, because in your mind, you know that someone is going to be auditing that return. So if you stick to that and if you follow that, you're going to be all right. All right. Number 2, for my home business owners, break up those large expenses down into detail. Having a $25,000 miscellaneous expense on your tax return. How you going to be miscellaneous with 25 grand? No, we got to be specific. So you might have bought a $10,000 coaching program, or you may have had to, have a large expenditure for your office, right? Whatever that is, you want to break that down. So if you had to spend $1,000 for, an industrial size, copier, the copiers can cost like $5,000, right? So you definitely want to break down those expenses so you just don't have some big, huge number sitting there with nothing to really say what it is. And, and tax professionals, when you hire a professional, 9 times out of 10, they're asking you, okay, what exactly is in this miscellaneous? So we can really have a discussion about how we really itemize that. So you're not just got this huge expense just sitting out there and leaving the IRS wondering, I wonder what they spent $25,000 on. Well, let's just ask them. And then you wind up getting audited, right? So break down those large expenditures. Number 3, stop posting all your business on social media. Okay. Cause listen, everything don't need to be on social media. I know, contrary to popular belief, everything does not need to be on social media. And here's what I mean. You see yourself, you go to the event, right? You at the all white party. You got the phone up, getting your rock on. You just getting your party on. You dropping it like it's hot, right? You showing that you at the event and you all on the beach and all of that. You showing all this money that you just took out the ATM, right? You showing all of this stuff. You showing yourself go buying the new car and you paying cash for it. All this stuff. Y'all want to put all this lifestyle stuff out there on social media. Okay. So the IRS has what's called a whistleblower program. All right. So if somebody that's watching your social media, and I don't like you that much, I can call the IRS and say, yo, they spending all this cash. I don't think they're claiming it, right? And so then the IRS will use that same stuff to convict you, because then when they audit you, they're like, okay, we see that you spent this here. We saw you went on this trip here, but we didn't see you doing any work. We saw where you bought this car at $15,000 cash or whatever, but we don't see where you paid taxes on that. And then the person that ratted you out can get up to 30% commission. Yeah, it's a program. There's a form that you fill out that I can say Erica Vincent is living this lavish lifestyle and paying in cash and stuff, and she's not paying any taxes. And so the IRS will go, okay. And then if they investigate Erica and find out that she's actually doing what I said, and then they audit her and have her pay back all this money, I get a check. And there are actually people that make a living doing this. As a matter of fact, I want to say the most recent case was with Caterpillar, I think. And I think the whistleblower stood to gain like $2 million. So depending on who you blow the whistle on, that can be a really lucrative thing. But, make sure that you ain't wrapped up in it as well, is all I'm saying. But just know that not everything goes on social media. Stop telling people your business. If you think you're getting away with something, why are you going to tell everybody? Cease and desist. Keep your mouth closed, because that's going to be the same thing that turns around to convict you. I see people talking about, I'm doing so-and-so with cryptocurrency and I'm not paying any capital gains tax, or I'm claiming this deduction and that deduction. And I'm sitting here going, y'all just all the way wrong. Okay. But this is the thing that you have to really look at. Keep your mouth shut. Keep your business off social media, y'all. It ain't that hard. All right. Number 4 is to report all of your income. Y'all. Okay. So what happens is, people get paid by PayPal. They get paid by Stripe and all these other third party type payment processors. And then they don't report the income because they think that the IRS doesn't know. Okay. Well, those third party payers also have a reporting requirement. So they send that stuff to the IRS. And if you get a tax form in the mail, okay, then there's one sitting at the IRS, the 1099 miscellaneous. Absolutely. If you get one in the mail, there's one sitting at the IRS. The one that catches people is the 1099-C, because what happens is when you have a debt that's forgiven, like, I see people, I settled so-and-so credit card bill for $300. Okay, well, if you had a $1,000 bill and you paid $300, then the question is, what happened to the other $700? Because see, then you'll get a 1099-C in the mail for $700 that you now have to claim as income and pay taxes on that. So when you go talking about, I've settled this and I don't have to pay that, you might not have to pay that company. But you're going to pay taxes. Now, one of the things that's now gone away was with the whole real estate debacle. One of the provisions that was in place is that if you had a 1099-C that was secured by real estate, that you did not have to pay taxes on that. That has since gone away. So just know that, like, if you have a short sale or something on your home and the mortgage company forgives, let's say, $100,000 worth of mortgage debt, well, guess what? That's now $100,000 worth of income that you have to pay taxes on. Okay, so those 1099s, there's a whole laundry list of them, but the 1099 miscellaneous and the 1099-C, those are the two that will get you in trouble the quickest. Okay. And then number 5, make money in your home business. Yeah. Stop operating at a loss. Right? Because, like I said, when you first get in business, you guys, you're expected to lose money because you're investing money before you've had a chance to sell anything or sell your product and all of that stuff. Okay. So yeah, you're absolutely expected to lose money. But if you're continuing to lose money year after year and you're getting refund after refund, the IRS is saying, okay, if you're consistently losing $5,000 a month, a year in your business, okay, let's say that you're losing $5,000 a year in your business. How are you still in business? How are you still in business? This is what the IRS says. So then if they want to know how you're in business, and so they say, excuse us, we'd like to get more information about such and such expense. We'd like to see evidence that you are in business, right? Now, the audit doesn't necessarily mean that you're doing something wrong. Quite the contrary, but you've done enough to make the IRS suspicious. And so that's when they come to make sure you haven't done anything wrong. But trust and believe the IRS, if they come for you, they are like pretty sure they're going to win. I think the IRS win rate for home business owners is like 85%. And then don't let it be fraud, because their fraud win rate is like 90. So they don't lose very often. So if they're coming for you, they're pretty sure that they're going to find something and they're going to win. But like I said, there is not a single person under the sun that can keep you from being audited. Absolutely not. There will be some people who will never get audited a day in their lives. There are going to be some people that get audited every 5 minutes. But if you treat every single transaction, if you treat every single return like you're going to get audited tomorrow, then you're going to be fine. Okay? That's the deal. But yeah, so listen, that is it for today's episode of Home Biz Tax Talk. If you haven't gotten my Home Biz Management Guide, you definitely want to get it. It's on sale now. But yeah, and this is what's going to help you get your business organized so that in the event that you are audited, then you are prepared to win. Okay, so if they find something, it's going to be because they was looking real hard. Okay. So listen, again, that's it for me. Thank you guys so much for tuning in. Make sure you grab your coffee and I'll see you next time. All right, bye.